Friday again. I'm going to do a quick update video. We're going to focus a little more on the disclosure statement, kind of highlight a few things. We're going to go over it in depth next week. I'm not sure what day that video will be out. I'll be speaking with Tom later today and then the top of the week next week. So maybe midweek we'll get that video out to you. As far as the other companies, there are no real material updates. There's a few things we're working on. I think it's best to save our updates for things of substance. So we'll get to those next week as well, but we'll jump right into the quarterlies. Just give you an idea of what we're going to talk about and maybe a little better understanding of what you're looking at. Okay, so Q2, you'll notice, so some of the bigger numbers, you go down to the F section on the reporting dollars, you'll see that there was over 663,000 and change, just over 220,000 a quarter. Some of those fluctuate as far as the specific numbers. But again, I want to emphasize that's just a start, right? So we're going to look at those numbers. We're going to take a look at projections and how we intend to grow those numbers. But I think the important piece is not the specific dollar amount, but to know that the reporting dollars have increased exponentially. And then, of course, taking a look at what the growth pattern is for the new line of Hygeia products when you look at some of that growth, because we've had some pretty big months. So again, that's just a start, but let's take a look at what are, the key factors. The specific dollar amounts are less important when you're looking at how to analyze your financial statement at least from my point of view. I look at the ROI, I look at the metrics as far as growth, and I like to look month over. So if you look at the gross profit, it was around 460 something. That is a huge metric. When you're looking at somewhere in the 60 percentile of your revenues going into profit, that's pretty big. And we want to maintain that. We want to focus on that because that gives us the capital and the ability to expand and invest dollars internally in other areas. An indication of that would obviously be the marketing dollars spent. So when you look at your gross profit, or I should say your total sales or revs, when you look at the amount of money that's been reinvested into marketing, you're looking at about a 50 percentile number. So when a company is reinvesting or 50% of its revenues into itself to grow the company, I think that's about, I'd like to see it a little bit higher. I'd like to see if we had those margins big enough where we can invest 70%, but right now 50% is pretty good, and I'm very pleased with what we've been doing in that area. And these are some of the things that when you're sitting in this chair, you look at to make sure that all the companies are kind of progressing with an eye to the future so that we can really develop a growth strategy that's not just sustainable, but that'll deliver results. So when you also look at the repeat sales numbers, that's something we haven't disclosed, so we'll talk about that here real quick. We're looking at about a 25 to 30% in sales or repeat customers. That's pretty strong when you're looking at, especially when you're looking at a month, July and August, right? And I understand that these Qs do not represent, this July and August are not in Q in this particular report, right? What you want to look at for this, when you're constantly adding new customers, that repeat customer number, that ratio is going to be down because you're constantly adding new. So February, we're looking at around 9% reoccurring, returning customers. And now, since we've had an established customer base, now we're looking at 25 to 30%. That's exactly what I want to see. I want to see that we had a marketing strategy that was implemented, built up a customer base, and that we were able to retain that customer base. We're right where we need to be right now. When you look at July and August, these are the typical slow months for retail, right? So we're maintaining these numbers even through a slow period. It's exactly what I want to see. So again, very good reporting on and very good efforts on our subsidiary parts. So then the other thing you have to look at is inventory. What does a company have in inventory of the product that it sells? So for us, what we've done is we've invested heavily not just in building the supply chain, but making sure that we don't run out of inventory. I think this past month, if I'm not mistaken, we just for July, or maybe it was July, we spent about another 150,000 in replenishing inventory, not just strictly replenish, but also for future sales. So we constantly reinvest, not just in product development, but in inventory alone and standing inventory alone. Okay, so these are things that you take a look at when you're looking at the financial statement. You say, okay, they have X amount of dollars in sales. This is their profit. This is what the percentage of their profit that they are spending on marketing. Obviously, inventory was a carryover before the acquisition. So that company is constantly, we've been a part of that process. They've been constantly developing their inventory and product line. Before we had acquired them, we were working in concert with them and assisting in any way we could to help build this up in preparation for the acquisition. So another thing I wanted to take a look at are some of these acquisitions. So you're going to look at this reporting document or this disclosure statement, and you're going to notice a few things, and you're going to look at, what were some of the expenditures. So let's take a look at that, because I know that the breakdown is not as clear. So when we acquired H2O processing, we spent $8 million. The return or the ROI projections were around $20 million. So then you have to take a look at, we're gonna amortize this over the course of a 12-month period, and then look at what our ROI is. So the Dreaming Company and HBC Health Solutions, we bought in one purchase for $1,750,000, and we're looking at first year revenues of around $12 million for that company projected. Ossifix, $5 million was the purchase price, and we're expecting around a $9 million annual return. Boost Words, we spent $1.2 million to acquire. We have an expectation of about $2.5 million in annual revs from that company. So when you look at the expenditure of what it took to acquire versus what the return or the projected return, we are just under 70% ROI for that particular investment, which is very good for the year one. It's exceeded what we initially thought we would get. We were hoping for about half of that, around 30% as an ROI, and we're upwards of 67% plus. So then you look at Nextcast. Now Nextcast we own 20% of, cost an initial purchase of $5 million for that particular equity purchase. We've got some other news that'll be coming out here in the next week or so that'll add to a little more information and give you a better, clearer picture on that company. And then 10% in Bacter, which for those that are not familiar, that manufactures, or we worked in concert with them to manufacture the Novi device that tests for COVID and other respiratory airborne viruses. That was a $5 million purchase. So all in all, when you look at what we've invested in those strategic acquisitions, so it's a partnership with those companies, you're somewhere in a return on that investment of almost 100%. Plus. Whenever I get to the 100% mark, we're not going to really expand on those projections. It seems silly to do so. For those that are familiar with the company, I think when you take a look at Nextcast and Bacter, I think it's pretty obvious the return on that investment is going to be very high. So this is some of the interpretation. We're going to go in depth, in detail, and then take a look at other possible interpretations of that disclosure statement, some good, some bad, and then everything in between. So the other thing that we should probably take a look at are some of the growth metrics. So a disclosure statement or financial statement by itself is not the whole picture. In fact, it takes a lot of information to have the whole picture. And this is where we're going to jump, kind of segue into the capital markets video series. I think before we can do that, we need to understand financial statements. We need to understand disclosures. So we're going to have a video that'll go over, like I said, this particular disclosure statement, and then we're going to have a few more videos, and then we're going to jump into the capital markets. We have to have a baseline of understanding before we can get into some of the more complex concepts of the capital markets. So a couple of things I want to take a look at. You take the disclosure statement and financial statement, you set that aside, and then you do a little bit of due diligence on your own, and you take a look at where we were, the year-to-date numbers, January to current. So the price per share growth. So you're looking at a price per share growth to date, year to date, of just over 2,200% increase. That is a phenomenal improvement. Now I know some of the pushback is going to be, Alex, the price per share was 0.001, and we're at this particular price now. I think we have it figured out at 0.023. So those numbers aren't very big. That's not what I'm going to focus on. That's for the investor to focus on. But when you look at the graph that shows improvement on certain metrics, or in some cases shortcomings, it's important to see so that you can kind of project out where is the company headed. And from my position, I look at it as where were we, where did I want to go, and where are we now? And then what's that difference? Right now, we're probably falling a little short of my own expectations on where I'd hoped it to be. A few things took a little bit longer. Obviously, getting current dragged out a couple of weeks longer than I had anticipated. That put some other things behind. We're able to catch up. So I think we're going to be, we'll probably within the next week or two, look at the calendar, probably the next 2 to 3 weeks, we'll probably be back on schedule so that it will not affect the year-to-date calendar where I thought not only the year-to-date, but also by the end of the year where we'll end up. So we're working to get caught up. So we're a couple weeks behind on that. So again, price per share, we're up 2,200 to 2,250%. Now the average dollars traded, why is this important? It shows what people are comfortable investing and trading on a daily basis. Give you a good example. At the beginning of the year, it was under about $6,000 daily, and now the average is over 674,000 and change. So you're looking at a growth percentage of over 12,000%. That's significant. Is it important, that specific number? No, but the exponential improvement in daily dollars traded is a pretty big deal, and it tells me a lot as the chief executive. The average daily volume, we've seen an improvement of over 200%, with some running 30 days, looking at some instances eight figures. So that's huge. We have a lot of market liquidity, and that's very important, not just for someone that's looking to manage some of the financials of the company and also bring in capital to the company, but also for investors that are trading on a daily basis. This provides them with an opportunity to trade on a daily basis and to experience or realize a return, either daily, monthly, quarterly, or yearly. So that's very, very important. And that metric of over 200% improvement year to date is significant, to say the least. So then I look at the number of trades daily. I don't know if everyone has access to this. Obviously, we get a little more access, or I get a little more access than most when we're looking at our particular company or security. So we were looking at about 30 trades on average in the beginning of the year, and now we're almost 800. That's an improvement of over 2,500%. So we have, and I'm not going to go down all of them, but our metrics are hundreds of percent to tens of thousands of percent improvement, depending on what metric you're measuring, across the board year to date. So we've seen a lot of improvement in the market, and we've seen a lot of improvement with the financial statements. So these are all good signs that indicate a positive trend moving in the right direction, right? And this is how we interpret that, or I interpret that, sitting from this vantage point when I'm assessing the performance of our company. So I hope that helps. And I wanted to jump into a few of the little things, but I think we're going to save it to next week. There's no real material updates for the other companies. We are working. I got some phone calls asking if we're working on funding in a few areas. We are, and I should have some news for you in a couple of weeks. Obviously, the S1 will be a significant contributor to that. I'll give you an update on the audits. I should have some more updates next week, or I'll be updated personally next week, and then I'll hand that off to you. And hopefully this has been a video that you'll find helpful, and it was something that perhaps it's a good segue into the video we're going to do next week, which will be a much longer, in-depth video. I may break that video up into a couple of parts just because I don't want to produce an hour-long video. This is going to be about 15 minutes or so, and that's probably much longer than I would like them to be. So we'll do a couple of videos, and as far as the capital market series, that curriculum, if you will, for lack of a better term, is I'm trying to get it down to a couple of minutes at a time. I really want to break these concepts down into simpler concepts so that everyone can actually benefit from this. And by the end, we all come out this having a better understanding of what our company is and where it's headed. So hope everybody has a great weekend. Thank you for taking the time out to watch me talk on a video, and I will talk to you next week. Thank you.